What is going on with Bitcoin? Why did the rally suddenly stop? Why aren't we seeing more gains? What's behind all of this? Who's selling here? Who's buying here? What do potential on-chain metrics say about all of this? Let's have a look at data most people are not considering. So first of all, have a look at this. This is the Bitcoin price with the best moving averages. More on that later. And on this vertical line over here, on the 14th of March, I have sold some of my Bitcoin. So that was just one day after the all-time high. I made a video for the premium members on that day. And the reason why I sold specifically on this day was this metric over here, the value days destroyed multiple. On that day, this metric turned red for the first time. And it doesn't necessarily mean that Bitcoin can't rally further from here, but it does mean that the rallies tend to slow down afterwards. Look at this. In January of 2021, the VDD multiple was very high. The price was at 39K. And yes, we did see our ultimate all-time high a few months later at 69K. But still, overall, the rally really slowed down a lot. And since I bought massively over here in January of last year, and I will show you why, I took some profit when this turned red. Now, what is this value days destroyed multiple? It's a technical indicator that uses data on chain. So we're not just looking at price data, we're actually looking at transactions on the Bitcoin blockchain. So that's a nice thing about the blockchain, right? We can see who's buying, who's selling. And what the value days destroyed metric is doing is the following. We are looking at all the wallets, all the Bitcoin on chain, and we are looking at the average holding durations. So we look at wallet A and we see wallet A has, say, 10 Bitcoin, and those 10 Bitcoin haven't moved for, say, 2 years. And after 2 years, suddenly those 10 Bitcoin move. That means we destroy the value days of 20 years of Bitcoin. So 10 Bitcoin times 2 years. However, if there's more active traders and they move their Bitcoin, this doesn't have so much of an impact. In other words, when the value days destroyed metric is high, that means a lot of people that usually do not move their Bitcoin suddenly do. So the diamond hands suddenly turn into paper hands. When the people that usually don't move their Bitcoin suddenly start moving it, suddenly start selling it, that's a bad sign. And that's normally when you also want to sell. Because this is how I approach Bitcoin on crypto in general. I want to do what the smart people are doing. If the smart people, the long-term holders, they tend to hold, then I hold as well. When the smart people tend to sell, I tend to sell as well. I don't have to be smart myself. I simply just copy what other smart people are doing as well. Copying the winners is a winning strategy in itself. So I'm not saying that Bitcoin can't go higher from here, but I do say that the upside is now somewhat limited. So this is the value days destroyed multiple. There's a slight adjustment for this. This is the coin days destroyed. A very similar metric. For the value days destroyed, we multiply the coin days destroyed by the price. For the coin days destroyed, we don't do that. We are not really interested in the price. Still, the peaks also aligned pretty well, and this is now going down again, indicating that long-term holders aren't selling that much anymore. And so there's all kinds of interesting metrics. Another one is the realized HODL ratio. So this simply looks at how much trading activity, how much movement activity is there for Bitcoin for the medium-term holders, as in the wallets that hold on average 1 to 2 years versus the short-term holders, the wallets that only hold for 1 to 2 weeks. When there's a lot of people that hold for 1 to 2 weeks that get more and more active, then that's a sign that the short-term holders are taking over, and that again, the upside potential is limited, right? You want to have as much Bitcoin as possible in the long-term holders because they tend to on average not sell. When there's a lot of Bitcoin in the short-term traders' hands, that means that the rallies are less stable. Because a short-term trader, when they don't see the short-term momentum continuing, they might exit very fast. When a long-term holder sees a little bit of a wick, they might just buy a bit more. They might not be as concerned. So there's more sensitivity to volatility for those short-term holders. A rally is more stable the more Bitcoin is in the long-term holders. And when the realized HODL ratio is high, that means that the short-term holders are taking over. And we've seen how those peaks actually declined with each single end of a bull market. So they align somewhat. So it's not really surprising that this is turning around a bit earlier than October of 2021. Here's another interesting metric, the short-term holder supply. Also, of course, this went up. Also, here the peaks decline from rally to rally. Once this is lower again, then of course the Bitcoin price has an easier time to rise again. And so here's the big question. Let's say we are pessimistic. Let's say we do not believe in Bitcoin hitting now the 150 or the 200K price point. Let's say this rally is already over. I don't believe that, but let's say it is. In case it is, how much lower could Bitcoin now fall? Where is the potential bottom? The reason why we want to ask this question is to assess risk versus reward, right? We need to see how much potential risk is there and how much potential reward is there. To answer that question, I like to look at the realized price. The current price sometimes falls below the realized price, and whenever it does, it's a very good opportunity to buy. And that was the reason why I bought so heavily in at those 16K. We were below the realized price. Currently, the realized price is at 28,500 roughly. So we could potentially even fall below that, right? That would then be a very nice buying opportunity. Now, what is that realized price? The realized price is again an on-chain metric that looks at all of the Bitcoin and at what price did the Bitcoin move. So the current price is simply just the last transaction. The realized price looks at all transactions on the entire blockchain for all Bitcoin and simply asks, what's the average price that the Bitcoin moved for the last time? In other words, if the current price is above the realized price, then the market in aggregate is in profit. If the current price is below the realized price, then the market in aggregate is in losses. So when the current price is below the realized price, that means a lot of people are probably not going to sell. They're simply just going to wait it out. So I believe that for the very long-term future, we're going to continue to oscillate around this realized price. Sometimes we will be below, sometimes we will be above. And of course, when we are below, we should be buying very heavily. When we are above, then it's a bit more tricky. Then it's always the question how much longer the current momentum can last. But for that, we've got, for example, the value days destroyed metric. And so that's the potential risk, right? More than a 50% drop from here. I'm not saying that this will happen tomorrow, but I am saying that people are underestimating still the volatility in Bitcoin. When prices are going up, when the recent price action was positive, nobody wants to hear that Bitcoin can drop 50%. But maybe we simply just continue going sideways for a while. And maybe at that point later on, the realized price will be, say, 35K, and then we drop below the 35K. So seeing 30K in the future again in Bitcoin, I think is totally reasonable. So there is the real risk of a drop of 50%. Now, what's the potential upside? Before we go into this, let's have a look at the Bitcoin ETF data, because this might be one of the reasons why Bitcoin isn't going up that quickly anymore. Have a look at this chart. This is the number of Bitcoin that's being held by various ETFs, including the Grayscale Bitcoin Trust. We can see that the Grayscale Bitcoin Trust loses more and more of its Bitcoin. And that's because it's a very expensive vehicle to hold Bitcoin. And so a lot of people simply just sell their Grayscale Bitcoin Trust shares and buy the cheaper BlackRock ETF or Fidelity ETF or any other of those ETFs. And so we started out with 619,000 Bitcoin being held in those ETFs. But have a look at this. Since middle of March, the number of Bitcoin that's been held in all of those ETFs is not growing anymore. And that's a problem, of course, for the price action, right? We all expected the ETF to absorb more and more Bitcoin. If that now halts, that's not good. The big question is, will there be some kind of a decoupling? Is this simply just currently people transferring their Grayscale Bitcoin Trust money into the cheaper ETFs? Or are people from the Grayscale Bitcoin Trust actually taking profit? And is the demand independent, the demand of those other ETFs independent from the Grayscale Bitcoin Trust outflows? I don't dare to make a prediction here. I tend towards the first answer. I tend to believe that most people simply just roll over from Grayscale to the other Bitcoin ETFs, which would not be good, which would mean that when we see the outflows out of Grayscale stopping, that we'll also see the inflows in the other ETFs somewhat stopping. And we already don't see any growth in the last month. And that then also explains why the Bitcoin price isn't getting pushed up by those ETFs anymore. The long-term holders are selling while the Bitcoin ETF demand is not balancing out those sales. Thus, there's more liquid supply, thus the price goes down. Now let's have a look at something less scientific. This is a very long-term Bitcoin chart. And we've got two curved lines over here. And the curved lines are not scientific in any manner. They simply just historically connected the tops and the bottoms very well. And with this quote-unquote model, we'd see a potential risk down to 28K. This is also in line with the realized price, and a potential upside to 110K roughly. Last time when the value days destroyed peaked, we were at roughly 40K in Bitcoin. So that was over here. And then we saw another 60% rally. Now the value days destroyed are up again, and the upside is very similar. Are we going to see the 110K? Who knows? It probably depends on the Bitcoin ETF demand. The risk is a 50% drop. The potential reward is 60-70% gain. It's relatively balanced, but again, the market in aggregate is currently in massive gains. The realized price is at 28K. At that price, we are all neither in profit nor in losses in aggregate. Now let's go back to the beginning. At the beginning of this video, I was talking about the best moving averages for Bitcoin. And this is actually how I started this channel. I made back tests on what kind of moving averages work the best for Bitcoin. And whenever the price is above the moving averages, I tend to be long. I tend to hold quite a bit of Bitcoin. Whenever the price is below the moving averages, I tend to be quite a lot in cash. And I tend to rather hold stocks or maybe bonds. If we were to fall below 53K, then I think all bets are off. Then I think seeing the 30K in Bitcoin is very likely. So have a look at this. This is the back test that I've made. It starts the data in middle of August of 2017, goes all the way to March of last year. So I'm not updating this every single day. Buying and holding during the time period would have given us 20% annualized. And here is the trading result according to different moving average durations. What we can see over here is that the 120-day simple moving average worked very, very well historically. So here's a different representation of that. On the x-axis is the duration of the moving average. On the y-axis, the annualized performance. The 120-day simple moving average worked the best. For the best exponential moving average, we have to take the 72-day. And so that's what we are seeing in this chart. I doubled down on my Bitcoin position very heavily when we crossed those moving averages over here. Of course, there were some failed signals, and sometimes I was buying high and selling low, but that's why we have to trust our back tests. That's why we determine what's the best duration. And so far, things, at least according to this metric, have not yet turned around. We might still see the 110K. But if the Bitcoin ETF demand doesn't suddenly pick up, and we are continuing on our merry way sideways and down, and we are breaking that line in turquoise, the 120-day simple moving average, then I believe reaching that realized price is a very likely scenario. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Link is down below.